There was quite a bit of nervousness among market participants going into the US elections, which were held on 3rd of November, and you had seen some bit of volatility increase in the markets as well. Both the CBOE VIX along with the India VIX had shot up significantly, suggesting that there could be more volatility once the election is out of the way. Of course, the election itself was surrounded by a lot of drama. However, at the end, President-elect Joe Biden was declared as the winner. Of course, it is Donald Trump who will still be contesting the verdict that has been delivered so far. But for now, we have Joe Biden who has been declared as the President-elect of the United States of America. But coming back to the markets and how they have positioned themselves, if you have a look at the market performance 1 year after the election, there is a lot to cheer about because the S&P 500 since 1985 has gained 7 out of 8 times 1 year after the election has been conducted, and the average gain during each of these election periods has been 14%. Now 14% in itself on an index is quite a big number. However, if you compare that to the MSCI EM index, it has been an underperformer. Yes, you heard me right. It has underperformed despite the fact that it has gained 14% during the next 1 year. So the S&P 500 has underperformed the MSCI EM index 6 out of the 8 times that we are referring to, and by a big margin, because the underperformance has been to the tune of about 17% for the year after the election has been held. Now, what are the two factors or the two most important factors that the emerging markets actually cheer? One is the dollar index. The lower the dollar index, the better it is for emerging markets. And this time around also, we have seen a significant 10% plus correction from its 52-week high. And as we speak, it has closed very near to its multi-year low around the 92 mark. So that of course bodes well for the emerging market space. And the second most important factor is the liquidity flow that emerging markets have seen. The MSCI Emerging Markets ETF has seen an inflow of more than $1 billion since the election date and has also rallied more than 7% since then. So definitely it looks like emerging markets are more cheerful than the developed world when it comes to the post-election rally of the next one.